Been 3 weeks since Marissa Mayer took over as chief executive of Yahoo, and finally the stock's making a big move, although it's gone down 5% today on news yesterday that the company is re-exploring what to do with all of its cash. Now, Rob, you've followed Yahoo for more years than either of us probably care to remember, and we see here that Yahoo's got, what, anything up to $16 billion of cash on hand if it sells its stakes.
What it has is it's got $2 billion in cash, and they're selling a chunk of their Chinese asset. The Chinese company doesn't want them there,
This
so
is
they're selling
Alibaba.
it. Yeah, so they're going to get about, it's $7 billion, they get about $4 billion after tax.
Right.
And Yahoo had said, hey, great investors, you'll finally get some cash back. And now
the previous guys had no idea what to do with the money.
Exactly, you know, because Yahoo's been messing it up for years and years and years.
But they've got other assets they could sell as well.
Exactly.
In the future. So this is what we're looking at here is that this Alibaba sale, once it happens, is an indication of what Marissa Mayer might be doing.
Exactly.
Right.
And Marissa Mayer, no surprise, is coming in. You know, she's a really high-profile exec at Google. And you don't hire someone like that to unwind the company. She's coming in and saying, well, hold on, let's just see if we want to acquire something and see if we can turn around Yahoo. That's, you know, for shareholders who've been counting on returning up to like 70% of the value of the company in cash, that's a big change.
So a 5% drop, as we've seen this morning, doesn't seem to be that big considering that there was that amount of cash at stake.
No, it isn't. But the reason why it hasn't dropped further is two things. First off, investors are probably expecting a little bit. And the second thing is that Yahoo is just so down. Shareholders are so used to being beaten that they're probably not surprised by this latest hit.
But, I mean, you've been looking at another metric as well, which is how investors might be valuing this cash, right? So,
what we're looking at is just said, okay, if 70% of the company is valued at cash and the stock's trading below what it probably should be based on, you know, other companies, et cetera, how much are investors discounting the cash by? In other words, how much are they counting on vaporizing? And it looks like about 25%. So in other words, investors are saying, well, you know, let's just take whatever value of cash the company has and just discount it by 25%.
And the reason they're doing that is what they're assuming that whatever acquisitions she makes might not actually make money for the company.
Yeah, a couple things. You know, a lot of acquisitions are just really stupid. Other acquisitions, you just pay too much for them. Most acquisitions don't work, and so investors are probably right to do
So
that.
essentially, they're looking at this thinking, okay, well, we kind of expected she'd do something, so the stock can go down 5%. But actually, if you dig down it, we're already assuming that you're going to waste money anyway.
Yeah, maybe you'll waste a little more money than we expected.
Well, okay, thank you, Rob. I'm sure that's not great news for Marissa Mayer, but I'm sure she'll also be concentrating more on the drop in the stock price rather than the value of the cash. We'll be keeping an eye on that as usual, and we'll be back next week with more breaking views.